Yo, what's going on, guys? This is back, and today we got a brand new video talking about stocks in the stock market. Are we looking at a second crash coming in the near future, and what to expect? Going right into the bank's earnings reports and talking about what happened with them, and kind of break down those reports and numbers and how the market is looking at this kind of report and what people are doing. So, are we looking towards a second crash? I don't know, but after we look at these numbers and reports, it might be a little bit more clear for you to make your own opinion, and we'll see what we do at the end of this video. But for now, the banks released their earnings report, and one of the biggest ones was JP Morgan released theirs, and they are actually down 70%. Their profits are down 70% as they brace for loan defaults, as you can see in like the headline of that article there. Now, if you just read that, it's going to sound and look very bad. It's going to seem like things are just doing terribly. But when you break down the numbers and dig into their report a little bit, you find out that they normally have it's like $1.3 billion in a account ready for loan defaults and people who aren't going to pay their payments on like credit cards, mortgages, things that they have loans out on. And if people can't pay their payments, the bank still has to pay it. So that's why they have that 1.3 billion set aside just in case something like this happens. Now, they've actually bulked that up quite a bit from 1.3 billion to, I think JP Morgan has over $5 billion in that account right now. So they have almost 5x'd their account of ready to be ready for defaults and people not making payments. So that could be something that is actually a good thing for them to stack money and be able to withstand a barrage of people who might not be paying their mortgages or their credit cards in the near future, as people might be expecting. And if you look at their earnings reports, mostly, these headlines of like 70% down in profit, you could probably see that that's a big bad news. A lot of bad news is coming out with a lot of companies right now, because the more bad news they give us right now, the less we're going to react to it, because it's already, the stock market and stocks have already been ravaged so much by the illness going around that they want to release the bad news now so that people are expecting it and nothing's really going to happen. And then later on, when people are still expecting bad news, they could deliver good news and help their stock price go up and their company, everything go up. So that's what we might be seeing right now, is them preparing for the worst and giving us these bad headlines like 70% loss in profits, whereas they actually are just preparing for the worst. And in the second quarter, third quarter, fourth quarter this year, they might report good things and help their stock and help ease the market a little bit on what is going on right now. So if we look at what the banks are doing right now, because their earnings reports have come out, everyone was interested in what was going on with them, giving all this bad news now and hoping for better news. Maybe they don't have great news in quarter two, but they might have better news than what people are expecting. And if they can do that, then they would have beat the market and beat the expectations, and everyone involved in investors, the market, and everyone around would just be more calmed and more accepting of good news, even though maybe it's not great news, but they were expecting worse. And this is what a lot of other companies might be doing as well. So we can look out for a lot of bad news coming from companies, big companies like Apple, Microsoft, Disney, Google, all these things. They might be releasing bad news right now too, because it's not going to really affect them. The stocks have already been pushed down so hard that bad news now isn't really going to be pushing them down any further. And by doing that, they get all their bad news out of the way right now, where usually they would like sprinkle it through so that doesn't affect their stock that much. But they just do it all right now, and there's not going to be a big reaction to it. And then throughout the year, they might be releasing good news or better news and better than expectation news. And by doing that, it'll actually be helping their stock continue to rise, helping ease the market a little bit and ease people's fears of like the world ending and companies not being able to make any money anymore. In terms of a double dip or like a second crash coming, I don't see it really right now. All these reports and stuff are kind of as expected and priced into the market. A lot of this stuff isn't super like out of the ordinary, out of what people were expecting, what we were expecting. These are bad numbers, but right now is really anything bad is just kind of already thought about happening and already priced in a little bit. But if we continue to see that, if we see in quarter two, the company's continuing to downturn, report less income and less profit and less revenue, and seeing things getting worse, then we might see something else happen. But for right now, I don't think that we're going to see like a huge second crash like we did the first one. I think that we still are perfectly fine and safe on investing on red days like I've been doing, and like a lot of people have been doing, is investing on the red days, building up their portfolio with more of those blue chip stocks is what I've been doing as well. So blue chip red days of what I've been looking for right now, because those are companies that were super expensive and because of this have come down a lot. So I think they're in the realm of buying, like they are worth going out and buying. I've done a video talking about the 3 stocks that I'm continuously getting in and kind of dollar cost averaging in, and they're stocks that people pretty much probably would expect, but maybe aren't really looking at. One of them on that list they might not be looking at because a little scared, but that video is right here, is the thumbnail or whatever, and you can go in the description, I'll link it, and you can just watch it. Give me back your feedback, what stocks you're getting to and all that type of stuff. But as for a second crash, I don't know. Nobody knows. Nobody can tell you definitively what's going to happen or if there is a second crash coming. But I think no matter what, even whether you think there's a crash coming or not, I think everyone should take the same approach of just dollar cost averaging into the market. We don't need to flood the market right now and buy $1,000 of stocks of one company right now and just see what happens. I think it'd be smarter to dollar cost average in. So to buy, like if you're going to buy 100 shares of a company, to buy like 20 now, maybe it's a red day, you buy 20, the next day maybe you buy 10, it's a green day, the next day it's a red day, you buy 20 more, and to continue buying in that way until you get your 100 shares, because that's going to protect your money more, especially if we have a huge jump up, then you're going to be in it to make the profit. But if there's a huge jump down, you're going to be there to buy your average down. So when eventually, if it's a blue chip company, when it comes back up, you're going to enjoy the profits of that company. And it might be a long time, it might be over a year, but it'll still happen. This is what happens with the market. So that's what I think everybody should be doing and focusing on right now, is dollar cost averaging their way in and not necessarily dumping all of their money on one day throughout the market because they see like a red day and dump all their money there, but then the stock continues to fall. You don't want to be stuck in a situation where you're eating the losses with no way of buying down, your stock average, which, I mean, if you put $1,000 in and it's in that stock and it drops 10%, you don't have the money unless you're going to put more money in to buy more of that stock to buy your average down and stuff like that. So that's what I would do. That's what I am doing. Obviously, I've said I'm looking at blue chip stocks to do this with and buying on red days because that's still a good deal. So if you buy on a green day, you might catch a good wave up. But if you buy on a red day, you're already buying on discount. And if it goes back up, you've made whatever you bought the discount at. If it went down 2% that day and it goes back to where it was, you made 2%. And if it continues to go up, you make more money. So that's what I think we all should be doing right now and kind of focusing on. That's the market. Is there a second crash? Who knows? Who really cares? Let's be investing for the long term. Let's look towards the 5-year market of these companies and not the tomorrow market, because nobody knows what's happening tomorrow. But everyone can pretty confidently say these companies that have been around for decades, that they're not going to go anywhere. So that's what I'm going to do. Guys, let me know what you're doing. Are you, dollar cost averaging in? Are you buying stocks now, or are you sitting on the sideline and waiting this out? Which I wouldn't necessarily recommend, but let me know what you're doing. Don't forget to smash that like button, subscribe. You're on the path to 1,000 subs and getting monetized here. And as always, guys, I'll see you on my next video.